And later on, price just went down there, smashed our TP, made about 35k on this trade itself. But because we lost 11k on this trade, so that's about 24k for the day. Understand that if you want to win in this game of trading, stop trying to beat the market. Flow with it. Be formless. Be adaptable. Be like water, my friend. And that's why I win. And that's why I'm a consistently profitable trader and you're not. So we are in the trade right now. So let me just show you why I actually entered for a buy right here. Even though, you know, we are heavily bearish on the 1 minute time frame. Reason is very simple. If I go up to, let's say, the 5 minute time frame, we already got like a very clear fractal market shift to the upside right here, which confirmed to us that, you know, there's a shift in order flow from bearish to bullish. And then right now, you know, we got an internal break of structure to confirm that this market shift is indeed valid, right? So internal order flow is actually bullish right now. So I'm expecting price to create another higher low right here before we push to the upside. And that is when I ask myself, where is the available liquidity, right? Because I've marked up my point of interest, I've marked up my demand zone that I want to be trading with, that is aligned with the higher time frame order flow. And then the next question I ask myself is, okay, what must happen before price can actually react from this area and head up? It must sweep some form of liquidity, right? So the next question becomes, okay, where is the available liquidity, right? We know that there is equal lows right here. So liquidity is available below these lows, but it has already been swept when price came down there earlier on. And then now there is also equal lows being formed right here, right? Which induced the retail traders to enter for a long position early right here. So once again, same thing, a lot of stop losses below these lows. So yeah, I was just very patiently waiting for that to be swept. And then also price step into our 1 minute unmitigated demand right here. You can see this is a fresh unmitigated demand zone, which indicate clear signs of imbalance, right? So yeah, this is where we are actually entering the trade on, right? So very high probability trade right here. Just gonna be placing my stop loss below the 1 minute point of interest. I'm potentially even targeting like this area right here. Look at this, lads, right? Like we are already getting a reaction from this 1 minute demand zone that we have down here. Once again, this is an extremely high probability zone because first of all, this is fresh and unmitigated, right? Price has not tapped into it whatsoever. That means there's some pending buy orders within this point of interest. Second of all, it led to a break of structure. And third of all, you can see there is a lot of imbalance, right? So you can see this is clear as day institutional zone that smart money actually entered into the market initially, right? So the minute price came down, tapped into this point of interest, we know for a fact that you can potentially get a sharp reaction, a very strong reaction, especially when there is also available liquidity sitting above it as well. So pretty much stop loss is below that 1 minute demand because this is the level which will invalidate this trade idea, right? If this point of interest fail and go down even further, then we know that we are wrong and we get out with like a small loss. Boom! Let's go! Let's get it! Let's get it! That's what I'm talking about. Bro, actually, market mechanics is cheat codes, man. I've said it time and time again, but understanding how the market works, understanding liquidity and order flow. Damn, I need to start scalping more, guys. Like, this level of precision is unreal, bro. You can tell there's like a bunch of buying pressure in the market right now as well. If you just look at the candlesticks alone, right? You can see all of these candlesticks are leaving like a very long lower wick, which means that the sellers try to push the price down, right? But because there's an overwhelming amount of buying pressure by the institutions at this area, they are pushing the price up. That's what creates all these candlesticks with like a very long lower wick, right? So you can see right now, clear as day, buying pressure, selling pressure still trying to overwhelm the buyers. But the buyers are saying, hell nah. And then it's like pushing price up right now. You can see candlesticks tell you everything. You just gotta pay attention. I'm dropping some chart sauce right here, guys. So please take all this sauce in, right? Just like swallow all of this sauce that I'm giving you right now. All of this shit for free? Like, this is crazy, bro. Alright, so we are done trading for the day itself. I was so locked in for the past like few hours or so that I didn't realize that I wasn't recording this entire thing. But anyways, we got stopped on the first trade, right? You can see on this trade itself, when we entered for a long position at this area, I thought that the internal order flow was actually bullish and price was actually gonna go up right now, right? But that obviously did not happen. Now, was this a high probability trade setup? I'll say it's more of like a medium probability trade setup. The main reason is because like if you look at the higher time frame, we are stuck in these like choppy market conditions. Obviously not the ideal scenario to be trading, right? Because the higher time frame order flow is just like very, it's not even clear, right? So in this case, I'll say this is a medium probability setup because after we did got our confluences and we did identify that this was a good point of interest to actually enter the trade idea from. And as you can see, the lower time frame order flow was also bullish as well. So this is what I call a good loss, right? Which is basically a loss that you incur after following your trade plan. So I'm just like, okay, whatever. So I pretty much just sat there and reevaluate my position because I knew for a fact that if price took out this low right here, this swing low, we are potentially shifting bearish, right? The internal order flow is shifting bearish. So over here, price actually took out that low, created a lower high, and then goes down even further. Oh, this is where I know it's game over. You know, it's time to actually switch bearish. And then what happened next is that price actually went up there to mitigate this supply that we have up here, and he also swapped the available liquidity above these equal highs right here. So when we got that, this was actually like the perfect time to start looking for some short position. So I actually entered for a sell somewhere right around here, placed my stop loss above this lower time frame supply that we have down here, and we just take profit at the next 15-minute demand zone, right? As simple as that. And later on, price just went out there, smashed our TP, we made about 35k on this trade itself. But because we lost 11k on this trade, so that's about 24k for the day. Overall, can't complain, man. We still managed to secure 24k even though we were down 10k at the start of the day itself. But yeah, like I said, this is what happens when you adapt to the market very, very fast. You know, Bruce Lee once said, "Be water, my friend." And what does that really mean for us traders? Well, water is shapeless. It adapts, it flows, or it crashes. And that's exactly how you need to be as a trader. Some days, the market gives you a very clean setup just like this, and you flow with it. And there's some other days where the market is choppy and uncertain, so you stay still. And some days, you take a L, you take a hit just like this, but like water, you don't hold on. You move on to the next trade ideal. You keep flowing with the market. Now, when I started trading, I used to fight the market a lot. I'll force trades when there is no opportunity. I would chase move rather than letting the market come to me. But once I started learning how to flow, right, to respond and react to what the market is doing, everything changed, right? I stopped needing to be right, and I started focusing on execution, on discipline, on being like water. Understand that if you want to win in this game of trading, stop trying to beat the market. Flow with it. Be formless. Be adaptable. Be like water, my friend. That's how you survive and scale in this game. And I think one of my biggest strengths as a trader is that I have no ego whatsoever when I'm trading. Like I see over here where I got stopped out, I don't feel the need to be right. I don't sit there and sulk. I just know that I need to follow my edge. So I reevaluated the situation, look for the next trade opportunity, and when that comes up, I execute without hesitation, reservation, or fear. And that's why I win. And that's why I'm a consistently profitable trader and you're not.